Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.
We're talking about the future of digital assets with Sophia Shluger. She is the managing director of Amber Group, headquartered in Singapore. Welcome to the show.
Thank you so much for having me. It's a pleasure to be here.
A lot is happening in the DeFi space, so we're going to be concentrating today with our conversation on the DeFi space, latest developments, but first, the Amber Group. So you told me offline, over $1 trillion worth of cryptos traded since inception in 2017, currently a portfolio of 5 billion AUM, and you're growing really fast. What is it that you do?
I'm actually overseeing our business development efforts in Europe. Yeah. I'm based in London in the UK, and in particular looking over our Blue Whale Club, where we're basically bringing in family offices and high net worth into the digital asset investing space. And so really focused on being the leading digital asset platform for our clients to build their wealth in the digital asset space.
And you were telling me that you had a series of panels here. The theme of your discussion here at the conference is that digital assets will become the most important asset for everybody, both on a retail and institutional level. Now, when you say everybody, do you mean just investors or do you mean the everyday consumer as well? Like, what do you mean by that?
That's a great question. And we actually service both institutional and retail clients. And we believe it is going to be the most important category of wealth for everyone. I think we're already seeing that in terms of the macroeconomic environment, where we've got inflation that's very high in multiple countries around the world. We've got very low yielding traditional assets. And where are you going to find alpha generation? You're going to find it in this new innovative asset class. And so we're really dedicated to helping our clients build their wealth in the space.
Okay, so we're going to touch on those points throughout this interview. Digital assets, can you clarify us exactly what you mean by that?
Absolutely. We're a crypto native firm. And so when I say digital assets, I'm discussing any type of cryptocurrency, coin or token, anything that trades on the blockchain.
So when institutions are looking to generate alpha with cryptos, I mean, that's a difficult task in itself, given the volatility, and you never know where it's going to go. It's had a very brief history in terms of price, and so for a fund manager, it's difficult to make forecasts based on a short period of time. A lot of new projects are coming online with zero history, and so if a fund manager approaches you and says, Sophia, I like to invest in this product or a project, but I don't really know where to start, what would you say to that fund manager? How would you reassure that manager that there is alpha to be generated within the space?
Yeah, absolutely. I think it's a fantastic question. I mean, I think everyone's at a different stage in their investing journey in cryptocurrencies. Obviously, we spend a lot of time doing education for our clients. But generally speaking, there's multiple ways in which to generate alpha, as I alluded to. I mean, you can take advantage of the structural yield pickup that is afforded in cryptocurrencies now. You can invest into either fixed or flexible yield products that we offer. So for example, on USD stablecoin, at the moment, I think we're offering 7.5% yield on an annualized basis, which is much better than what you'll find in any other, I'd say, asset class. And in particular, USD stablecoin is pegged to the US dollar. And so you're sort of avoiding some of that volatility that you might find in Bitcoin or Ethereum, some of those other.
Where does that yield come from? In a traditional bank, for example, if I were given a yield on my savings, which is obviously not 7.5%, but suppose it were, it would imply that the bank is lending at a rate higher than 7.5%, and the spread is how they make money. Yes. What's the case in this? Yeah,
absolutely. That's because of the futures curve being in contango. It's because the incredible amount of demand there is to borrow crypto assets and the ability to pay to borrow those assets from consumers, from clients, institutions, et cetera. So it's something that over time, as the market matures, we anticipate volatility will probably come down and yields will compress. So it's a matter of maturation. It's a matter of more liquidity coming into the marketplace, which we're seeing daily.
So the 7.5, is that a flexible yield you're offering clients, or is that like fixed for a certain term?
That's fixed at the moment. Obviously, we reassess based on our book and with the markets and the futures curve. But I would say ballpark, that's what we have been offering. There are other sort of more juicy yield products, like a dual currency structured product, where you can have much higher yields over a shorter time frame, but it's a slightly different product depending, of course, on the client's risk appetite and investment strategy.
When we talk about yield generation, there's a lot of ways for projects and platforms to generate yield, yourself being one of them. How do you feel about staking and protocols that generate yield through algorithms and more advanced designs?
Yeah, I mean, absolutely. It has a place in the market, and I think we're very supportive of DeFi and decentralized finance in general, and the amount of opportunities it presents for individuals and institutions to earn passive income by participating in the market, by staking, doing liquidity farming, et cetera. So we're very, optimistic. We are excited to see the market continue to grow, and we're actually investing very heavily. We actually led the last round at 1 inch, and we've invested in other sort of protocols and projects.
I think one of the tenets of finance is that the higher the yield or return, the greater the risk. It doesn't really come free.
Well.
So let's comment on that.
Yeah, no.
If I were an investor and I say to you, Sophia, that sounds very high, what's the risk involved? How would you respond?
Yeah, I mean, look, at the end of the day, there's always credit risk or counterparty risk, but we've been in the business since 2017 officially. We've got great risk management, internal processes and protocols. So, from a risk perspective, yes, there's no free lunch, but it really, again, depends on the client and their risk reward appetite, right?
Let's go back to your previous statement about how digital assets will become the most dominant asset for everybody, institutional and retail investors. Are you seeing that adoption happening now? Because I think you're speculating into the future, right? So at what point will we start to see digital asset adoption up to maybe 100% of your portfolio?
Yeah, no, that's a great question. And I mean, look, I don't think it's going to happen overnight, but I think the industry has reached an inflection point. You see a lot of very traditional financial players come to market, like BlackRock, Facebook changed its name to Meta. A lot of these companies are investing for the future because their clients are demanding these products, right? So, we see the data. We see that 1 million Bitcoin is held in the hands of institutions, or about 5% of the issued supply. We've seen the 40 millionth unique Bitcoin wallet being created. 80% of institutions that were recently surveyed by Fidelity believe that digital assets have a place in the portfolio, and about 21% of hedge funds are trading it. And that comprises about 3% of their AUM. Those are some of the statistics that we're seeing. So on our side, we're onboarding a lot more institutions. And of course, institutions, you have to clearly define what that means. Is it hedge funds? Is it high frequency trading desks, or these crypto natives? Individuals, participants who've been in the market for a long time. Generally speaking, there's a lot of interest, and we're really excited to get more regulatory clarity in different places around the world so that we can best service our clients and really act with the best standards in front of us.
Well, 3% of AUM is still, one would argue, a negligible amount. When are we going to see go up to maybe 60%, for example? Let's say your 60-40 portfolio, 60% instead of equities is just digital assets.
Yeah,
what's the roadmap towards getting there?
That's a very good question, and I think regulation is a huge part of that. I think education is another part of it. I can say that family offices, about 30% in Europe and Asia, are holding digital assets in some capacity. From an asset allocation perspective, I've spoken to family offices that think about it. Bitcoin is digital gold. I should be holding this in lieu of gold, physical gold, or segmenting my portfolio in such a way that I hold a bit of both. So I think a lot of institutions are still thinking 2% is the right amount in the portfolio. But again, it really depends on the market, how it develops, and how familiar the institutions become with how protocols work, layer 1, layer 2s, how they understand crypto asset trading. And so we want to be there. We want to be a partner to educate and help our clients invest and build their wealth in it.
I'm curious to understand the portfolio breakdown. So let's just take that 3% that you mentioned earlier. Is that mostly comprised of cryptocurrencies and protocols, or are we talking about blockchain companies?
Yeah, great question. That statistic in particular was referencing cryptocurrencies in particular.
Okay.
But as you rightly alluded to, institutions are getting exposure to this asset class in a number of different ways. We've seen a lot of venture capital money pouring in. And so, of course, there's other ways to get exposure, either through buying the digital asset directly via spot or investing into new projects and protocols.
I think you probably get asked this a lot, but retail investors in particular are wondering whether or not institutional adoption is actually happening still. We saw a huge run in basically the entire cryptocurrency market last year, as you know, end of 2020 into last year. So one could speculate that, maybe the institutional adoption that needs to happen has already happened, which is why we've seen a slowdown in price growth for Bitcoin and the altcoin space ever since November. How would you respond to that?
Yeah, generally speaking, the data shows that there's been multi-week inflows into Bitcoin funds in particular. I think institutions still rather, capture the beta in the market by investing in Ethereum or Bitcoin, the more liquid of the coins. That said, multi-asset funds as well are also benefiting from a lot of inflows. So I think, again, over time, we're going to see institutions play in some of the more, illiquid altcoins. But at the moment, it's really Bitcoin and Ethereum as the two of choice, if they do it on a spot basis.
A more illiquid altcoin. I don't see a Fidelity, just me, I don't see a Fidelity buying Dogecoin or Shiba Inu.
And I'm not suggesting that, but who knows, a high net worth individual might, just want to punt it, right? But when I say illiquid, I don't mean, some of the Doge coins. I mean some of the real, DeFi projects that have tokens that have real, world utility, but that, are just now being listed on exchange, and now are sort of, liquidity is growing.
Okay, let's talk about that. Institutional investors do care about things that are legitimate.
Yeah.
Okay, so how would you advise a client or an investor to pick a project? If they're looking for a project with real utility, what is that utility?
Yeah, that's a really great question. And it's a hard one because, again, we're talking about projects and companies that are solving for problems in the DeFi space, which is a space that is continuously evolving, right? And so, things that we like are cross blockchain solutions. We like data storage solutions. We like things on the infrastructure side that will really allow, the industry to grow. We need the infrastructure in order to be able to bring in some of the other players.
Okay, but going back to utility, what are we talking about in terms of use case?
Yeah, I mean, look, I think if you think about lending and borrowing has been one of the strongest cases in DeFi, right? You see Aave and other, companies that have grown tremendously through this ability for people to lend peer-to-peer and earn really great yields. So I think at the end of the day, when we talk utility, we talk about sort of real world value. What are people looking to achieve in DeFi, and how are they going to go about doing it? Okay. And so again, that's just one use case in DeFi, and there are other ones that are coming to the market. But again, it really has to be related to solving real world problems or providing solutions to people that, that see value in it.
Well, one real world problem that I guess everyday consumers have is the transaction cost and speed of traditional finance. What coin do you think could solve that problem?
Oh, that's a great question.
If I were to send you money, wire you money, it'll take hours, if not days. Banks don't work weekends as well, so you were talking about business days. I don't want to wait till Tuesday or Monday if I'm sending you money on Friday. Anyway, you get the point. So what coin do you think would solve that, or a series of cryptos do you think would solve that problem?
Look, I would say any of the more advanced, like layer one solutions, the ones that have very high transaction speed per second, like Solana's, the Polkadot's of the world, et cetera.
Solana and Polkadot.
It just depends. I don't want to comment. This is my view, not Amber Group's view. But, if you open a wallet at Amber, you can easily send money to and from crypto wallets and to peers and on and off ramp with your bank account. So it really just depends on what you're trying to achieve. But the good news is using blockchain, you can send that money quickly, securely, and cheaply.
Have any of your clients or associates been talking to you about country adoption of cryptocurrencies and whether or not that's the future for everybody? We've already seen El Salvador, and I've heard rumors of other countries in that region adopting or working on adopting Bitcoin as legal tender. Is that a framework that you're keeping your eye on?
Absolutely. In fact, the Treasury just announced about a week ago that they will recognize stablecoins as legal tender. And they are committed, yes, to building the UK as a crypto hub for the future. So yes, in certain jurisdictions, governments are looking at it because of the benefits of developing that sort of capability. That said, if your question is, how is CBDCs going to coexist with the digital asset market, I think it remains to be seen. I think it's great that governments are experimenting. They're looking into how this can be used. But I think we're a long way off from understanding truly what the CBDC is and what it will do. Is it a digital replacement, a fiat currency? Is it really just a mechanism for banks to lend to and from each other? There's a lot of unanswered questions that we have to get to.
Well, just on that note, when the UK is thinking about adopting a legal tender, using a stablecoin, are you talking about an existing stablecoin, or are you talking about a Bank of England coin, which is a CBDC?
That's a really great question. To be honest with you, it's not entirely clear to me because the announcement said just stablecoin. I do believe they are developing their own.
I think they are.
Because I think that would be a bit more, let's say, prudent for them to support one that they've created as opposed to one that a private company has developed. But it's at least the news is in the right direction. So we'd love to see that the regulators are sort of embracing that same attitude towards the market.
Don't you think CBDCs are a threat to firms like yourself? I mean, why would institutions need to adopt stablecoins or other products similar if the governments are not mandating, but allowing, mass adoption of their own government-issued stablecoin?
Yeah, no, I don't see it as a competitive threat. I mean, I think the service that we offer, we're not going to see the UK Treasury replicate. We're basically building the next generation digital asset wealth management platform. We're basically a digital assets investment bank. And so, we provide insight and the technology and the platform for clients to capture long-term value in the space.
When are we going to start seeing corporate finance done with cryptocurrencies. The next IPO, well, ICOs already exist, but most of the M&A transactions today are still done in fiat currencies.
That's right.
When's that going to change?
I'd love to know as well, but I think you're onto a good point that, tokenizing real world traditional assets is definitely coming up and coming up soon. I mean, I was just looking at statistics about cross-border trade finance, which is a $35 trillion business, which, right now about 122 million is traded on blockchain,
right.
And that's expected to grow within 5 years to 1.8 billion.
I would imagine if a large exchange, like, not name dropping anyone in particular, just off the top of my head, FTX or anybody, wanted to buy a crypto project, that merger could be done in just a native token, right? Why go through a fiat currency if you could just transact in whatever currency they were offering in the first place?
Yeah, that's a very interesting point.
Would there be regulatory roadblocks to doing that?
I imagine there would be, because we'd have to understand how that would tie into the existing regulatory framework, tax considerations, et cetera. So it's something to watch out for. I think it's not without the realm of possibility, but it's not something that I at least have seen sort of in the works. But look, I believe it probably will be coming up. I mean, innovation is key to this market and key to traditional financial markets, right? I mean, you see the onslaught of SPACs in the equities market, so different ways of doing things and delivering value to consumers. So I'm sure it will happen in the future.
If I were a client at your bank, I deposited an X amount of money, and I say, hey, Sophia, I'm interested in purchasing everyday items through crypto platforms that basically allow me to pay for whatever or shop with whatever using Bitcoin. Would I be able to get a crypto credit card from you guys? That's
a great point. That is definitely on the roadmap. So without saying too much, I mean, right. I think the idea of taking our capabilities and really transcending that into sort of a neobank, crypto
Basically,
native.
What I'm wondering is whether or not a digital asset bank or investment bank like yourself is evolving into offering all lending products that we currently see with fiat currencies.
We will offer as much as makes sense for us and for our clients, but absolutely, we are innovators at heart, and we would, it'd be great to have our clients using cards and connecting their Amber wallets at more points of sale.
Have you ever wondered why traditional banks have not done what you are doing already? I mean, They have the infrastructure, the capital, the brain power, the talent. Why aren't they doing this?
I would actually, and this is my own personal opinion, I'm not convinced that they actually have the infrastructure. Okay. They have a lot of legacy systems that don't interact with each other, and so there's a lot of development work that would have to take place. We built our entire tech stack in-house, and that ability to be so modular is what helps facilitate all the trading that we do. We trade 5% of the daily volume of crypto, upwards of $5 billion a day, and we're able to do that because of our tech stack. So I think a lot of the players would love to have that same setup. But I think the way that they're going about it is either renting or leasing infrastructure capabilities from a third-party company, or yes, they will have to invest significantly to build it.
And just final point on institutional adoption, do you think we've matured already, or do you think we're still in the early innings?
Oh, we're definitely still in the early innings, and that's what's so exciting about it. The market's come a long way, but there's still a long more to go.
I see. You've got over 100 plus digital assets offered on your platform. What are some projects that are trending right now? Coins, cryptocurrencies that are picking up rapidly in terms of adoption?
Yeah, absolutely. Look, it really just depends on the market day to day. I couldn't say that the trend we're seeing in Luna now, maybe it won't be sustained, et cetera, right? What I can say generally speaking is that we take a very long-term and sustainable view on our business, and as part of that, we're very dedicated to corporate social responsibility. We actually are investigating different ways we can use blockchain to participate in carbon credit trading and offer that capability to clients. So these are things that we're exploring, and we're really excited to use our capabilities to offer that to our clients.
Is that of interest to clients because, I guess, miners generate so much carbon and they need to offset that with credits?
Well, great question. We actually bought 2 million worth of carbon credits with a partnership with Moss to offset mining trades. But I think generally speaking, not just the traditional financial markets and players are interested in ESG. I think as a society, we recognize that climate change is an issue that we must tackle. And so we want to be, as much as possible, a carbon neutral business for the future. And it's a process. But the good news is, we see, proof of stake methodology coming to Ethereum, as well as the other blockchains. So hopefully from a carbon perspective, the industry is becoming greener by the moment.
There's a lot of stakeholders out there that would argue that Bitcoin in particular is quote unquote bad for the environment. I'm not going to say any more than that. I'll let you respond.
Yeah, look, I mean, I think we all know what proof of work, how energy intensive it is. I think at the end of the day, it's a very young industry and it's innovating very quickly. So we'll try to solve that problem. As of now, it's still in the works.
How will we solve
Well,
the
I
problem?
mean, I think it's sustainable energy. I think it's finding, we have a mining business and, we look at, the grid, we look at energy prices, we look at how to build that capability for our mining clients, but in a way that, again, is sustainable for the long run.
Okay, I'm just curious to know your personal background. Before you started working at Amber, where were you before?
So I started my career at Goldman Sachs in New York. I worked in several different areas, investment research management, and then I became a stockbroker covering Latin America. So I'm half Brazilian. Most recently, before joining Amber, I was working at a Brazilian brokerage called XP on an equity derivatives trading desk in a sales coverage and business development capacity. So I've had a long career in TradFi covering institutional clients.
All right, so if you were to give advice to, let's say, a person entering college and he wants to work in the crypto industry sector, what should he study? Engineering, comp sci, finance, all of the above?
That's a great question.
How do you break into this nascent industry?
Yeah, I mean, I would suggest that person to follow whatever they're most passionate about. If they have a predilection towards engineering or mathematics, choose that path that will be satisfying for them from an academic perspective and learning within school. But all of those skill sets are valuable in crypto. I would say get involved in the market, whether it be attending conferences or networking, join a DAO, but really sort of get your feet wet and understand the industry, who the players are, and what kind of a role you'd be interested in taking on.
And of course, given your background, what you did initially had nothing to do with cryptocurrencies. Was the learning curve very steep for you? What was the hardest part in gaining a foothold and understanding this industry?
Yeah, absolutely. I think that's a very fair question. It's all brand new, right?
Yeah.
And I'd say, we're a CeFi institution, but obviously we invest in DeFi and it's a huge part of the market. So, coming up the curve and understanding all the different players in DeFi and how they're different, the different layer 1 and layer 2 protocols. It is a steep learning curve, but it's a very satisfying one when you do meet the people that are building these solutions. So it's not something that anyone can't learn, it just takes some time.
Right, I'd imagine the technical aspects of the computer science part was challenging as well.
It can be, absolutely. In my day-to-day, I'm mostly speaking to family offices and high net worths that are thinking about it as an asset class. Right. And so that really leverages my background as being an investment advisor for institutions.
Final question, I'll let you go. Just comparing, because you worked a lot with traditional assets, how would you compare, if a client were to come to you and say, Sophia, I'm curious to invest in, I'm curious about the crypto asset market at large. I'm interested in investing in the marketplace, but the volatility scares me. Would you categorize it as a subsector of equities whereby it's a very, very volatile, let's say, penny stock? Or would you characterize it as a completely different, separate asset class that has its own volatility profile that should be invested with a different set of rules?
Yeah.
Basically, how should I approach this with my portfolio?
Yeah, and it's a confusing one as well because some people call it currency, some regulators regulate it as commodities, but the volatility is there. I've seen reports that really equate it to equities. So, let's say the higher beta equities like tech stocks.
I mean, Bitcoin, for example, trades exactly with NASDAQ, just on a more levered level. So it's interesting how that...
It is, and it's also really interesting to see how sometimes, depending on the risk-on trade, Bitcoin and the other crypto assets decouple from the traditional equities market. Sometimes they don't, right? And so we're seeing that different trading activity. But for clients, I would think about the fundamentals of what it represents and the unique alpha generation opportunities for the future. And I would say if you're worried about volatility, come to Amber Group and we can help you hedge your exposure.
So if I were a retiree, I'd come to Amber Group and I say, look, I'm looking for something that could potentially generate a yield for my pension, or something a little bit less risky as an asset. Is this a space I should come to?
You can absolutely look at it and perhaps allocate a small portion of your portfolio, but as I mentioned, USD stablecoins, kind of is devoid of that volatility, right? So there's different coins and tokens to consider, as it relates again to your risk appetite and your investment strategy. So I think there is a place for digital assets in most people's portfolios.
Well, generally, what type of investor is interested in this space?
I would say some of the more sophisticated, again, hedge funds, family offices, high net worths. I mean, everyone is interested and curious, right, because of the amount of yield that one is able to generate. So I would say most people are interested, perhaps not pensioners, as you mentioned, because they've already made investment decisions in the past that have realized themselves. But at the end of the day, I think the unique thing about digital assets is that not only is it decentralized, but it's trustless and permissionless, right? It's this asset class is for everyone, by everyone, and that's part of its ethos.
I think I said final question 3 times. Last question, I promise. Your outlook in the crypto markets. Some speculate we're in a crypto winter that happened after 2008 to 2020. Some speculate we're still in the early innings of mass adoption, like you said. Well, what's your personal outlook in terms of growth, valuations-wise?
Yeah, I mean, look, we've heard Goldman Sachs put a $100,000 price tag on Bitcoin. To be honest with you, I'm very bullish as this Amber Group. I mean, we've seen, recently Bitcoin test some short-term, support levels around $40,000 a coin. But generally speaking, we haven't seen any, let's say, worrying, selling from institutions in the recent pullback. At the end of the day, we get a lot of inquiries of institutions that want to get in, want to understand how to play it. So I'm generally very bullish. I think there's a lot of macroeconomic, news and noise happening, whether it be geopolitical or, Fed-related interest rates, inflation. So I think we just have to get through a lot of the noise. But I'm very bullish in the short to medium term.
You don't think altcoins and Bitcoin are going to be decoupled in the future, or will they continue to move in parallel?
That's a $1 billion question. I think eventually they will decouple, but again, it remains to be seen.
Okay. All right, Sophia, thank you very much.
It's a pleasure. Thanks for your time.
Thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of Paris Blockchain Week Summit is brought to you by Okra, permissioned DeFi composable index and strategy execution platform.